Welcome everyone, Simon here from the Wells of Wall Street. We have a special edition video for you guys here today. We will be interviewing Jannah from the Digital Pound Foundation, talking about everything CBDCs, some great insight ahead of us right now. So let's go straight into it. Now that we've got Jannah here from the Digital Pound Foundation team, welcome Jannah to the channel. It'd be great to hear a bit more about yourself and, of course, an awesome intro to the Digital Pound Foundation themselves. So welcome.
Thank you, Simon. It's really great to be here, and I'm looking forward to our conversation today. So I'm Jannah Patchay. I'm the policy lead and one of the members of the originating team behind the Digital Pound Foundation. So the Digital Pound Foundation was launched in 2021 as a corporate member-led organization that advocates for the implementation of what we call a well-designed digital pound in both public and private forms, so both central bank digital currency and various types of private issuances like stable coins or tokenized e-money or tokenized commercial bank money in the UK, and also for what we refer to as an effective, diverse and competitive ecosystem for all these new forms of digital money in the UK. So I guess there's two really important things there. The first is that we're not talking about cryptocurrencies here. We're talking about basically fiat referenced digital money. So the pound as we know it today, but just in a different digital native form. And the second is that we're very much in favor of an ecosystem of new forms of digital money. We're not entirely pro CBDC or entirely pro private sector solutions. We see that there will be a future in which both coexist, and there are obviously challenges and limitations to both, and there are reasons why the public will want access to both in the future.
That's spot on, and I guess CBDCs is a massive topic at the moment, and of course the transition of this over the next few years, the pilotings that are going on, and you kind of like nailed it on the head just a minute ago actually, in relation to like some of the kind of barriers, if you like, of launching. We would call it a digital pound, obviously here in the UK. Of course, other countries will have their own renditions of this. Maybe you could perhaps touch on some of those particular kind of like blocks and barriers that we might see in front of us over these coming years to actually integrate something. This isn't an easy thing to put in place, right? There's so many variables and things we need to consider.
Yeah, absolutely. And I think it's probably useful to do a bit of scene setting first.
Yeah.
First of all, when we talk about a digital pound, what exactly do we mean? Because for many people, they'll say, well, isn't the money I use already pretty much digital today? I mean, I know when I'm using cash and I know when I'm using card payments or account transfers, and that's all digital, right? And the answer is yes, it is digital, but it's the digitization of processes and layers of infrastructure that have evolved organically over decades, in some cases centuries, of the evolution of money and payments. None of this has been, designed from the ground up to be digital native. And so when we're talking about new forms of digital money, we're talking about the ability to say, well, what is it that we need or want to do with money and payments today? How do we actually want to transact with each other and with businesses and stuff like that? And what's the technology that we have available, and what can we build that's actually, fit for purpose now and in the future? And that's the big innovation when it comes to these new forms of digital money, as the Bank of England refers to them. That they're digital native, they're designed from the ground up to operate in a digital environment and therefore offer capabilities and potential use cases that our existing payments infrastructure and the forms of money that we have today don't offer. And the other thing, before I get onto your question, is I think it's really important to distinguish for your listeners as well between retail and wholesale CBDC and digital money. So there are basically two major kind of payments pieces of payments infrastructure in most countries, and the one is the wholesale infrastructure. So this is how your big commercial banks and financial institutions settle their payments with each other, and that is typically operated by the central bank or by a central operator, and access to it is limited, and it's meant for, you know, really large scale payments in a very trusted, secure environment. And so, and then the second is retail payments infrastructure, and that's the normal payments that people and businesses make day to day and things like that. And so, with both of them, introducing a CBDC would be a massive undertaking, because you're talking about, you know, potentially replacing or having a concurrent running system and interoperability with payments, legacy payments infrastructure that has been in place for decades, that's well understood and things like that. And in some senses, you know, you can't think of it as just this big bang project where we build something new and introduce it and that's it. There's going to be the likely phased approaches and concurrent running of different systems. And we're likely going to see this running alongside everything else that currently exists. Again, especially on the retail side, this isn't necessarily a replacement for cash. It's an alternative to cash. But these are, as you say, massive, massive projects. And aside from the technical and, you know, implementation challenges, probably the biggest challenges are around adoption. On the wholesale side, for a bank to adopt a wholesale CBDC is a massive undertaking. So there are huge efficiencies to be gained, because you can have instantaneous settlement of transactions and things like that. But you have to remember that all the bank systems today are actually built with latency in mind. They're built to accommodate the delays that exist in current payments and settlement structure. And so the introduction of something that actually has the capability of settling instantaneously will lead to a massive need for re-architecting of their internal processes and systems, and potentially impacts on their business models as well. And then on the retail side, probably the biggest the biggest challenges to adoption is public trust. And just the general, you know, reaction of the public to a CBDC, and that's where it becomes, you know, more a PR exercise, and how it can't be designed in a vacuum. It's kind of got to be done with a lot of consensus from the public, and a lot of communication with the public, and a lot of trust, and a lot of the challenges around trust and privacy being addressed in design, because people don't trust politicians that they will just keep promises. They are more likely to trust the design of something, and to know that, you know, politicians will forever be, governments will forever not be able to do certain things with the CBDC, like, you know, reclaim your funds when you haven't given them permission, or things like that. And so I think it's that trust that's going to pose the greatest challenge and obstacle on the retail side. I mean, whether that trust is entirely warranted, or whether that mistrust is entirely warranted compared to private sector solutions is probably another question. I mean, in many cases, people are at the moment quite willing to give up huge amounts of their data to existing payments providers without really knowing or caring about what kind of data is being exchanged. But it is nevertheless a challenge that has to be addressed.
Yeah, it's really interesting. I guess, like, even with all our smartphones and everything, how much data has been like captured over a long period of time, whether you know it or not, or you've perhaps, you know, signed, you know, the terms and conditions without reading them and things like this, like what things go in the background. So, you know, it totally resonates with this kind of aspect as well. I guess we're in a fortunate position, I think, particularly with like this whole like blockchain crypto philosophy of being, or hopefully, open and fairly transparent. And I think as these frameworks are building, it's becoming really interesting. And I think a lot more people in like the general populace are getting more involved at these kind of like early stages, I suppose. And you touched on it a second ago in relation to perhaps like some of the the pros and cons of CBDCs. And I think this is quite important. Of course, you mentioned about like privacy and data and things like that, the correct usage of the system. Is there anything like that sticks out in your foundation's mind right now, where you obviously like talking to those top levels of making sure that essentially kind of like trying to protect the end user, whichever capacity that is in retail or commercial, to sort of be that hopeful middle ground that says, look, hang on a minute, we need to think about these areas. Is there anything that's like popped up recently or in the past or moving forward that you see as real pros and cons towards this kind of new system?
In terms of privacy or just generally?
I think just in general, really. I mean,
yeah.
I guess like main questions like come from our audience in various different ways. I think like in particular, like the control mechanism of CBDCs, like who's regulating this, who's controlling it, all of these kind of things, really.
Yeah, I mean, I think there's lots of benefits to CBDCs, and here I'm going to focus more on the retail side because I think that's the side of for most people, really. A lot of the wholesale use cases are a little bit more obscure and they're not really related to people's everyday lives, whereas retail is kind of where it's at. It's the money that you and I use. And well, there's first of all the question, well, what can we do with it? So it's like pretty cool to have this idea of digital native money, but what can we do with it? What's the point of it? And the answer is there's a bunch of things that we can think of that we can do with it today, and there's a bunch of things that we might not think of right now that we might be able to do with it in the future. There's features and functionality that can be added to these new forms of digital money. The ability, and I say new forms of digital money as opposed to CBDC, because when I'm talking about, both privately issued stable coins and things like that, as well as CBDC, and I'll get into what like the main difference between them is in a bit as well. But like, if we can, we can design a form of digital money that's programmable. For example, I could have I can have programmable payments today, but I can have more sophisticated programmable payments. I can have programmable money, so money that actually can be allocated for certain purposes, or payments that can be triggered on certain conditions and things like that. I can also have enhanced functionality, such as the ability to make fractional payments. So right now, I'm constrained in the existing banking system to make payments in, like pence and pounds. I could have fractional payments that are actually, that can actually, be triggered by microservices. So we're opening up a whole new possibility for services to be provided in different ways. Like an example of that could be if newspapers, so newspaper articles, increasingly they're behind paywalls, and you don't necessarily want to take out a subscription to the Financial Times or The Economist just to read a single article that your friend has sent you on WhatsApp. But if you could potentially link your digital wallet to it and just pay for the article that you're reading, and that might like cost half a p or something, but it's still, for you it doesn't really feel like anything. For the paper, it obviously makes a huge difference to have some revenue coming in, and also potentially widens the reach of some of their work as well. So those are some examples. And, when you look at the potential for digital native money in conjunction with other frontier technologies like AI and machine learning or the Internet of Things like that, we start really looking at how they can enable the transition to a more digital economy. And the digital economy is kind of a scary thing, because we hear AI and ML and look at, Chat GPT
Yeah,
and
massive.
that, or the more entertaining one. I don't know if you've read anything about the Microsoft Bing AI, but
Yeah,
there's some
yeah, it's all
great.
coming through now, isn't it? Very
Yeah.
fast as well.
Yeah. So these can be scary
Yeah.
things. Just as digital money, just as the potential control that digital money can afford both corporations who are private issuers and governments. Some of the appeal for governments in issuing a CBDC is around the potential policy delivery benefits. For a government, for example, the ability to collect tax at the point of transaction could be an appealing feature. The ability to earmark certain funds for benefits, so for certain usage. So, for example, if you're paying like childcare benefit to someone, you want to make sure that that is actually going to childcare rather than going to subsidize their housing benefits or something like that. On the other hand, it also enables you to potentially, if you're a government, see where there are holes in your benefit system. If you suddenly start, earmarking certain funds for only being spent in certain things, and then you discover actually there's a massive hole opening up somewhere else because everyone was using those benefits to pay for their housing benefit. And you then realize, well, actually, I haven't been paying high enough housing benefit.
Yeah.
Now, obviously, this all depends on having an incredibly benevolent government who says, yes, we made a mistake there, we're going to have to fix that. And again, people don't necessarily always have sufficient trust. So some of those policy delivery benefits, interest rates as well, the ability to interest rates more effectively through the economy is one that's of particular interest to some economists that I've spoken to. Interest rates have been rising in many countries around the world, the UK, I think Australia and New Zealand as well. However, the interest rates that you and I are being paid in our bank accounts haven't kept up. So we're paying higher rates for credit, but we're not being paid higher rates ourselves. And there's an argument that, an interest-bearing retail CBDC could allow more effective propagation of interest rates through the economy. Now, there's, as I mentioned, the downside of this. It's an instrument of control. A government could potentially introduce, or a central bank could introduce negative interest rates to encourage us all to spend our money rather than hold it. And so I think there's this delicate balance that governments have to go through when they're introducing a CBDC to think, well, yes, I might be able to do those things, but is anyone actually ever going to use my CBDC if I do introduce one that does these things? And in the UK, certainly the Bank of England's discussion paper, consultation paper on the digital pound, which they recently published, they've made it very clear that in the current design that they envisage, a CBDC will not be interest bearing. So it will be more cash-like in that respect. It will not be programmable, although potentially the payments interface providers that provide services around it could add programmable functionality to it. And so given it's not programmable, it wouldn't really be usable by the government for some of those use cases that we're talking about. And again, this is about, the trust that people have in the money that they use. On the private sector side, a bank could I'm not talking about banks here, because a bank could introduce a stablecoin and it would pretty much act like commercial bank money, which most of us use when we're transferring money between accounts and making payments from accounts and things like that, acts today. We're seeing a new wave of private sector money issuers. The most famous, of course, was what was then Facebook and its announcement, what was then Libra back in 2019.
That's right, yeah.
And I think, the interesting thing with that and some of the other big tech companies that have talked about introducing stable coins is these are not banks, these are private issuers. They're not intended to provide banking services. So how are they going to make money? Well, actually, a big source of value for them is in having the data on users and transactions. And that, to me, is a potentially greater source of concern that people don't always consider. They think about the government and what will the government do with my data. They don't think, well, what will a private company who actually sees me more as the product than anything else, what will they do with my data? And I think their regulation is going to be really key in ensuring public protection and privacy in the future.
It's a massive topic, isn't it? It can branch out into so many different areas. Even just like tokenized assets in general is something we talk about quite a bit on the channel, and a lot of people in the audience do as well. To play to earn, eat to earn, view to earn. Will this be all integrated into CBDC infrastructure? And rightly so, as you mentioned about these big tech companies utilizing in the crypto fashion, if you like. It's almost like a big brand tool, a big engagement tool in some instances. But yeah, absolutely. Like who regulates those, and what do we actually get out of that? It's really fascinating, and I think so much to get your head around over the coming years, of course. But I guess like that kind of nicely leads on really to the next questions, because I'm going to try and like incorporate these two together really, because we kind of reported around a year or so ago about the new RTGS system, finalizing around sort of November 2025. I think that's the calendar date, if you like. If you go onto most of the banking websites like Santander, etc., they've all got information about this now. In your mind, like, do you see it really being integrated in that short space of time in terms of like CBD infrastructure? Do you think it could be a bit longer than that? But then also, like, I guess with your adaptation with that, are you working with any kind of like other, I know you like work quite closely with like BIS, for example. Do you work with any other kind of organizations in relation to this development and this planogram that we've got in front of us, for the instance as well, of course, for things like cross-border payments? Because it's great having a digital pound, but how do you work with other people to see that is working and utilized across the whole world? Really, it's a massive project, right? It's huge.
And again, here I think we need to separate out the wholesale from the retail question. So RTGS, the new RTGS system, the RTGS renewal program, is very much on the wholesale side, and that's a piece of wholesale infrastructure that's moving towards more T+0 settlement. That is due to launch within the next couple of years, and in the UK, certainly at the moment, we're not talking yet about a wholesale CBDC. So, or there are no firm conversations being had about a wholesale CBDC at this point in time. So that is going to carry on as the kind of primary piece of wholesale re-architecting that's happening right now. And it wouldn't necessarily have any interaction with a proposed retail system, which is being discussed separately at this stage. So I think the short answer is, yeah, that's going to carry on happening, and there's nothing yet to indicate that some wholesale CBDC is going to be explored or launched that would have to interact with that. But as I said, if we did introduce a wholesale CBDC, like a retail CBDC, it would have to coexist with existing payment systems for some time, and it would have to be really useful. There would have to be some interoperability with existing payment systems as well. So that will have to be something that's factored into the overall program design and planning and things like that. In terms of cross-border utilization, so again, cross-border is primarily a wholesale use case, and on the wholesale side, the case for more effective and efficient cross-border payments and settlements is a massive one when it comes to CBDC. The potential to strip out some of the layers of intermediaries that exist at the moment, so the latencies. So it can take days for money to cross borders at the moment. That is definitely something that's being looked at by the BIS. So they've got a huge amount of experimentation going on in that direction. On the retail side, so again, going back to the Bank of England discussion paper, there's some really interesting questions on the retail usage in cross-border situations. Obviously, like if Facebook had introduced Libra at the time, then a key use case would have been the ability for users in different countries to transact with each other using Libra as like a common asset. And so I don't think for central banks it's really possible to consider introducing a retail CBDC without thinking about how individual users use it in kind of cross-border scenarios as well. So in the Bank of England discussion paper, they've said that the proposed retail CBDC for the UK, they envisage that it would be used by UK residents as well as non-residents, and those non-residents could include both people who are in the UK for short periods, like tourists and people on student visas, but also potentially overseas residents as well. I think that's going to be a really interesting area to explore, because it's all very well us saying, first of all, in the UK, we're going to open up our digital pound to users in the US or Nigeria or South Africa or Australia or Thailand. First of all, we mustn't forget that those jurisdictions also have a say in whether their domestic users can have access to like foreign currency accounts. In the EU, where they've just introduced MiCA, they've put limits on the amount of activity that can be undertaken in foreign denominated stable coins. And it's quite possible that, we might see similar limits introduced in foreign denominated CBDCs and things like that as well. But the second is like, there's a really interesting whole other conversation that you can have about CBDCs and why we need them, which is around the competitiveness of a currency on the world stage. And so far we've seen, to date, we've seen the supremacy of different currencies like the US dollar as the world's reserve currency being mainly based on creditworthiness. So the US's creditworthiness as a nation and things like that. But in the future, we may see the competitiveness of a country's currency on the world stage being linked to the functionality and the features that it can offer. And this is really interesting about, China's digital yuan project. If it offers, sufficiently competitive features and functionality, it could potentially become the default payment mechanism for all the, participants in the supply chain and the Belt and Road Initiative. And that, starts gradually. I mean, the US dollar is so dominant that we're a long way off from seeing anything even near rivaling it. But that can start opening up a question, the gradual erosion of that dominance, which doesn't necessarily mean that, China's currency is going to take over the world, but it could mean that it opens up possibilities for other currencies to become more widely used outside their own jurisdiction. And the pound could be one of those if it's seen as, a stable currency to which foreign users have access. If I'm in Zimbabwe or Venezuela or something like that, then maybe hold, the ability to hold my currency in a digital pound wallet is going to look really appealing.
It's really interesting. Obviously, the US dollar has been the reserve currency of the world for however long. It's absolutely right. It's like this new technological advancement has obviously got more questions than answers right now, but the capabilities are so interesting. You know, as you said earlier, there's really amazing, exciting things. There's also some few scary things out there that we just need to like balance out a bit and see what's best for the world and how it all works. I mean, it's literally, as I said, it's a massive topic, and you could be here for hours talking about it. But yeah, I'm really interested to see like the next few years of how this all develops. I guess just to like wrap up, Jannah, because I appreciate you guys are always busy. You know, what's the plan for Digital Pound Foundation for the rest of this year? If you maybe have some key things that might be happening, or things for us to look out as an audience, and just general advancements really to wrap up this awesome conversation.
Thank you. Yeah, so we look at both the developments in the private sector and the stablecoin space, as well as central bank digital currency. So obviously, with the Bank of England's consultation on the digital pound out, we're very focused on that. But we're also keeping an eye on what's going on in terms of stablecoin regulation. And our policy engagement and responses around that as well. So our time is split between the two. We're also starting to look more at the wholesale space as well. Over the course of this year, we'll continue to promote our work and agenda in two ways. First of all, it's about public engagement. Public engagement is a huge part of what we do, raising awareness. It's a very niche group of people in the world who actually understand what digital currency really is. And even most people in the financial sector today don't really understand what it is and what its capabilities are. So a large part of our work is educating people, bringing them up to speed on what this means, where the real concerns and challenges are, getting input from the public and different sectors of industry and things like that. So one of the things we do try to do, as well as making some of our events and podcasts more aimed at and accessible by the general public, is also convene a really broad conversation, because it's very easy for, I think, many people to pigeonhole this stuff into being part of the crypto world or being part of the fintech world, or things like that. We're trying to convene a conversation between a really broad group of stakeholders across both the traditional financial services sector, as well as the fintechs and the innovators and the cryptosphere and things like that, to all come together and to talk about, you know, what the future ecosystem looks like and how they will all be participants in it. The second is we're trying to broaden the conversation as well. So particularly with policymakers, there's a tendency again to pigeonhole all this as being, you know, a crypto stuff or payment stuff. Mm-hmm. We're trying to make it more real for policymakers in terms of that whole discussion around how new forms of digital money can support the transition to a digital economy, can support specific policy objectives as well. So it's not just about payments, it's not just about financial services or crypto. If I'm looking at the digitization of trade, for example, then new forms of digital money have a critical role to play in that, because that's how you implement the smart contracts that are going to, you know, govern your digital trade processes and stuff and contracts. If we talk about better benefits delivery, again, the new forms of digital money can support better payments distributions and things like that as well. We've talked about tax collection. And again, while we're not likely to see a programmable CBDC, you can have programmable payments that support some of this functionality too. So it's all about making it real to people, rather than the new forms of digital money themselves being the topic of conversation. It's, oh, what are you interested? What are the policies that you're interested in delivering? What improvements do you want to see? And this is how this type of money can support what you want to achieve.
Okay, well, I really appreciate that, Jannah. That was absolutely massively insightful, as I'm sure you concluded, and we have collectively that there's like so much to be done still, and it's actually like really refreshing from my side to see an organization like yourselves and people like yourself as well that are arguably like that kind of like intermediary, if you like, of particularly from the retail side of potentially protecting us, and having that kind of like influence of what we can actually achieve with this new system. So, you know, it's been absolutely privileged to have you on the channel, and hopefully you've enjoyed it as well. But it's been absolutely brilliant insight, and thank you so much.
Thanks so much for having me, Simon. It's been a great conversation, and I look forward to keeping in touch.
Absolutely. Thank you so much, Jannah. And hopefully we'll have you back on the channel very soon.
Thank you.
Thank you. Bye bye. Well, hopefully you enjoyed that special edition video interview with Jannah from the Digital Pound Foundation. I certainly did. Some obviously really interesting things happening ahead regards to CBDCs and other infrastructures in the financial industry. For those that are interested, you can see the link below to subscribe to the Digital Pound Foundation's newsletter. You can keep up to date with all the events coming up and all the other bulletin information. And for sure, if it's a topic and subject that's really interesting to you or you want to learn more, definitely do that. And it's a great avenue to be involved with this massive technological advancement that's right in front of us. So thank you for sharing that with us, and hopefully you guys will join us in the next special edition video. Keep an eye out for those on our socials, and of course by subscribing to this channel if you have not done so already. Thanks for joining us, and we'll see you soon. Bye bye.